Welcome to Drill on Earnings. We have quarterly results out from Lumentum. This is the fiscal third quarter for this company in the 2025 calendar year for them. But this is a really important company, one of the 50 most important companies in technology. I'm Cory Johnson, Chief Market Strategist of Epistrophy Capital Research. These are the things that we look at here. And these Q3 earnings for these guys better than Wall Street expected. This is a business in turnaround, right in the right sector, looking at AI, networking in the data center, as well as some telecom. Here's what it did. Strong Q3 performance here, $425 million, 57 cents a share in non-GAAP numbers. And growth, yes, growth from this business that was shrinking so badly, even as all their competitors were crushing it. Revenue growth is back at 16% on a year-over-year basis. And a new CEO, just 90 days in the job, was very happy to see that industry veteran who really knows this, guy that used to run Finistar, which was sold to Coherent. Now here he is. He was the CEO of Synapsys, and now here he is running Lumentum. Here's some of the things that work. Cloud transceiver growth, 50% sequential growth in cloud transceivers, with big business from 3 hyperscale customers whom they did not name by name, but they did quite well in that business. Both their AML and their CW lasers doing quite well. CPO and optical switches. CPO is the holy grail of what could happen someday. We'll talk about that more in a little bit, but they're starting to see some early production of CPO stuff with revenue expected in the second half of 2026. Believe it when we see it. We'll talk about that in a second here, but they talked about that in the conference call. They talked about tariffs, and they say it's going to cost them 100 gross margin points as far as they know so far, and a shift moving production from China to Thailand is underway trying to mitigate that. But they still expect to see some punishment because they're manufacturing in Thailand, and they don't really know where to move that production, if they can move that production beyond there. Their indium phosphate capacity and in-house transceiver production in their Thailand facility is really ramping up aggressively, but still demand exceeds supply, they said, especially for their AML lasers, which they're focusing on. And they gave us some really nice long-term targets. Expecting $750 million in quarterly revenue, 40% gross margins, 20% operating margins. How did the stock react? The market loved it. The stock was up 9% in after-hours trading after being up 46% in the last year. Some of that on the heels of, like I said, having a new CEO in the last 90 days. Michael Hurlston, I talked to him briefly at the OFC conference here in San Francisco just a few weeks ago, and a very impressive guy. And he talked about kind of how they're trying to focus on the CPO business that has always seemed like it's 18 months away for the last 5 years in the optical business. CPOs essentially are lasers really packaged right into semiconductors with the notion that you could move information within a data stack, within a server itself, using lasers with these co-packaged optics, CPOs. I'll believe it when I see it, but they say they're already starting to make some of these things, although not making them for sale. The adoption, of course, will be a whole other thing, because it'll be very complicated to use, but it is a holy grail here. And here's what Michael Hurlston, who knows this business, had to say.
There's definitely an interest to move away from Chinese supply. I mean, I think the problem right now is that collectively we can't meet the demand. So they are going to continue, I think, to buy from Chinese suppliers until U.S. suppliers can ramp to a level to meet what looks like a relatively insatiable demand. Generally speaking, there is some design insourcing going on. Some of the customers are doing their own designs, but the outsourcing is by far the dominant pole, working with third-party transceiver manufacturers. And, you know, we obviously are a small player at the moment. We expect, given the number of designs that we have in flight, we expect to be a more meaningful participant in the market starting next quarter, but then really growing into the quarters beyond that.
All right, what's it all mean? What's your big drill on earnings takeaway? Well, I got that. Q1 earnings from Lumentum, a really strong quarter from this company, $425 million in revenues, showed a 16% year-over-year revenue growth for this company. Finally, they're losing less money, which is good. Still losing money, but losing less, that's good. But the drill on earnings bite, the one number that tells you a whole lot, is 136. This company only had 136 days worth of inventory on hand, which is a lot better than where they were at a year ago when they were topping 170 days of inventory. The much better position to go into as AI demand is really driving networking coming from Lumentum. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson.